Hello everyone, thanks for joining us today and welcome to this educational presentation of Are we near the beginning of a bear market? Now, I know that sounds kind of funny right now because the market has been rising steadily for the last couple of days, in fact very strongly, but there still is a lot of uncertainty in around the world and with the economy and what's going on politically. And so a lot of people are concerned that either we could be in the beginning of a bear market or very near the beginning of one, and how one could tell when you're in, because bear markets are often referred to as thieves in the night. In other words, they always catch people off guard. Things are going fantastic, and all of a sudden you'll look back one day and say, what happened to the market? Boy, I just gave away maybe a quarter or half of everything I owned, and this just came out of the blue. So is there a way to protect us in knowing and identifying properly when a bear market is going to take place? I'd like to take a second to view this chart here of the spiders. This is a monthly chart of the ETF, the SPYs. This is the ETF that represents the S&P 500 index made into stock form. Now, this is on a monthly basis, as I said, going all the way back to 2007. If you recall, that was actually our last bear market when the market fell from roughly 2008 all the way down to 2009. And it didn't get a lot of people back in until late 2010, 2011. This was the banking and financial crisis. Once again, this came out of the blue as well. A lot of people were caught off guard. In fact, a lot of people lost all of their retirement. A lot of businesses went under, and that started the Great Recession that we've just, I believe, just about come out of. Some people will say we're still in the midst of it. But somewhere around 2011, a lot of people approached me and said, well, Steve, are we out of this bear market? Because even though we've rallied, this looks as if we're curling over and we're going to start going all the way back down. For example, many times you will have a strong move to the downside. You'll rally up to a certain level. A lot of Fibonacci and support and resistance people like to use this, and then roll over and make lower lows, okay? So a lot of people asked me this, and I said, you know what, with the help of a simple tool, you would have known that this was not the beginning of a bear market. With a little pattern I could show you, and I'll be sharing with you in just a few moments, you would have known that we were actually in a bull market and that we were going to go much higher, as we did coming into 2015, 2016. Now, at that same time period, look what happened. It looked as if we're going to roll over again. Now, bear markets on average happen every 3 to 4 years, okay? So we haven't seen one since 2010. So everyone was thinking, well, maybe this is it. We're going to roll over. Once again, I was asked the same thing. I remember speaking at a conference in Las Vegas, and people were asking me, Steve, a lot of our people are in, cash only. They've sold everything, and they're looking to short their portfolios because they believe we've started a bear market and we're going to come all the way down. At which time I told them, with the help of a simple tool, which once again I'm going to go over and show you today, you would have known that we were not in a bear market. And as you can see, just by looking at this little area here, you would have known that we were going much higher, which we have come into the beginning of 2017. Now, a lot of people are still worried, thinking, well, yeah, but Steve, 2015 and 16 isn't anything like the way things are going now around the world, economically and politically. So, I'm very scared. There's a lot of uncertainty. So how do we know, or how can we tell when a bear market is in the midst or is going to be beginning very shortly? Well, today promises to be a great presentation because I'm going to share with you exactly how to find out and exactly what I feel is the proper way to identify not only bear markets, but bull markets as well. So this promises to be a great presentation. Welcome. My name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to my webinars, we are all about educating you because, in my opinion, that is the one thing that is lacking from most traders: proper trading or investing education. Think of it. Why is it estimated that upwards of 80 to 85% of all traders fail? Is it because they have the invalid strategy, it's not working well? Is it because they're trading the wrong market, the wrong time frame, or they're listening to the wrong guy? What it is you're not supplied with the proper information. So what do you do when you don't have the information? You rely on someone or something else to do your trading for you, right? You rely on a broker, you go to a website, listen to what this guy, this trading guru was saying in the chat room or the trading room, you listen to the TV pundits, or you have some master system or indicator that tells you what to do. But in terms of you making your decisions, well, that's totally out of the picture. This is why most traders fail. And I say this from firsthand experience because my first 2 years of trading, I suffered the same way. Now, I started trading nearly 41 years ago, coming up very soon, but at least 4 decades ago, and I started trading on the floor of the stock exchange, on the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist. A specialist doesn't mean you're any more special than anyone else. It just simply means that you made markets in stocks, and roughly about 50 or 60 stocks. Now, I was a specialist. I made markets in a number of stocks, from Waste Management, US Air, to even IBM for a while. I traded through the crash of 1987, one of the most amazing, disastrous crashes there was. We hadn't seen a crash like that in 60 years. So I was on the floor when that was happening. So I have firsthand experience what it means to be trading through a crash and when to see if it's coming or if we're in one already. So what I know is that I've seen just about traded every method, every system, every strategy you can think of. And in my 4 decades of trading, personally trading, of teaching trading, of managing money, I know what works in terms of consistency, and I know what doesn't. So that's what we do at Specialist Trading. About 8 years ago, I teamed up with Pro Trader Strategies, and all we do is mentor and teach everyone around the world, all of our members in over 110 countries and in every state in the United States, all of the things that I've learned and that I currently use in my own trading that actually have some level of consistency. We're not trying to sell you some master system that works 1,000% of the time over the years and will never lose. We don't believe in that. What we're trying to do is teach you these things that are consistent so that you can put the power back in your hands, whether you're in a bull market or whether you're in the beginning of a bear market. So since we are an educational company, I'm going to show you how to identify a proper bear market, regardless of what markets you trade, regardless of what time frames. So this promises to be a great presentation today. But before we begin, as always, we are first required to show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results and show exactly how to identify if a bear market is in place or when it will become in place. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. As I stated earlier, we are required to show you this. So as you're taking a brief moment to view it, I would also like to invite each and every one of you, if you haven't done so already, to follow us on Twitter. You may want to copy our handle right there at SPCLST, abbreviation for Specialist Trading, obviously. I post information on a daily basis, anywhere from little bits of wisdom I've accumulated along the way to actual signals our strategies have generated. So feel free to follow us on Twitter. Lots of great free information on a daily basis. Now, as I stated, we are first and foremost an educational company. I'm not going to sit here and tell you like we're like most websites where we have the master system and the master signals and all you have to do is come here every night and we tell you exactly what to buy or sell. Now, we do that with our methods, but we do that for educational purposes so that you know what to look for. Because once again, the reason why most traders fail is when they use an outside source as a crutch to tell them how to trade, to tell them what to do. I mean, this is silly. This is your hard-earned money. And it's no different from any other profession. Can you imagine if a brain surgeon was in the middle of an operation, then he turns to his assistant and says, what do I do? Okay? Or an airline pilot turning to his co-pilot right when all his hundreds of passengers are in the air and saying, what do I do? How do I land this? But this is what traders do on a daily basis. They'll ask their friends, they'll ask their so-called mentors or people on websites, what do I do? Do you think we're in a bear market? What do you think of this stuff? Okay, it's silly because this is your hard-earned money. You should be knowing in advance what you should be doing. And this is what we provide all of our members around the world in every state in the United States. Information so that you know how to make your own decisions. Okay, we are first and foremost an educational company. And the reason I stress this so much is because, as I stated, when I first started trading, I was just like almost everyone else you would think of. Even though I was on the floor and I was privy to advanced information, I struggled like everyone else, okay? I couldn't make a dime in terms of consistency. Things would work for a couple of trades and I'd give it all back. So my mentors taught me the same things that I teach to all of my students around the world, because the things they taught me have sustained me for 40 years, for 4 decades. And hopefully what I teach all of our students will be able to sustain you. Not so that you'll have a great month or a great year, but that you'll be able to trade for 10, 20, 30, hopefully 40 years down the line. This is what success means. It doesn't mean making $1 million in 1 year. It means longevity. Okay? I know tons of traders who made millions of dollars while I was on the floor and they gave it all back. So what good was it to have some master system that gives it all back? You need to know how to become consistent. and this is what we provide all of our students and members. Okay, I'm going to share with you a lot of great information today, but I'd first like to start it out by saying, since this is educational and a classroom, if you have any questions, I would love to take them, but please hold off till the very end. Okay, I know a lot of you go to webinars and you feel free to ask a question on every slide. That's fine, but we like to do little things a little bit differently. If we stop for every slide, this 40-minute presentation will turn into 4 hours. So we'd rather wait till the very end. So if you have a question, if you joined us late, please wait till the end to ask any questions. The only question I will answer is the most common, and that is this being recorded? Yes, it is. We record all of our webinars, so if you missed it or having technical difficulty, if you have to leave early, just go to Pro Trader Strategies and ask for a link to this recording, okay? All right, so if you joined us late, please wait till the end to ask questions. Okay, so let's begin. Now, I'd like to start out with my experience in finding out whether we are either in or near the beginning of a bear market, because as I stated, in 1987, I was on the floor of the Pacific Stock Exchange. So I was actually trading and right there during the crash, which was about 30 years ago. And it was an amazing experience. I wouldn't want to go through that again, but just to give you a little bit of insight about what happened roughly about 30 years ago, it was called Black Monday. Now the stocks plunged. We had been going down for a little bit, but nothing severe and nothing to give us any warning that we were actually in a bear market. Now, what I mean by warning in terms of the average trader, the way most traders trade, okay? The market dropped 508 points, or about 22%. Now, it was sheer chaos, not only on the floor and amongst the traders and amongst all the brokers, but also the people, because people all of a sudden thought, that's it, it's the end of the world. We've never seen anything like this. The last time a market had taken a tremendous plunge and lost a lot of investors and IRAs capital was in 1929. So the markets hadn't seen anything like this in a while. And in terms of being on the floor, it was sheer complete chaos, okay? This was what was going on the floor. This is an actual picture, but this is a picture of one of the exchanges where things were going nuts. No one had any idea what your positions were. No, all you were doing was selling. Someone would sell it to someone else. Someone would sell it to someone else. You were just like playing hot potato. You were trying to get rid of any stock that you owned because prices were just dropping. Now, by the end of the day, I don't really know of anyone on the floor that had made money, myself included, because your job as a specialist, even though I knew that we were going lower that day, our job as a specialist was to provide a market. In other words, I had to buy. So by the end of that day, I lost what was comparable to losing roughly $3 million in one day by today's standards. And that was something I would have to make up. And that was a terrible, terrible day. Not because I was on the wrong side and I didn't know what was happening, but as my job as a specialist, I had to buy stock. I tried to sell it just as quickly to another market maker, but at the time I sold it, I was buying more of another stock. Remember, I was in charge of 50 stocks, and every one of those was making new lows. So I actually came out relatively unscathed compared to most traders. Losing roughly $3 million in one day was nothing compared to the people that had lost 10 to 20 million roughly by today's standards. Now, if we look at it, on October 19, 1987, the market fell 508 points. By today's standards, that's nothing. We see that all the time, and you know that's a normal trading day. But remember, it was down roughly 22%. If we compare that with today's prices, well, we're down almost 5,000 points in one day. Can you imagine seeing the Dow being down 5,000 points roughly in one day? That's what it was like in 1987. So this is why people are frightened of bear markets. We haven't really seen anything that strong. The last time we saw something was in 2008 when the markets fell out of bed tremendously. By that time, I was already teaching and I had most of my students already out of the market, and I'll show you how we had done that. Okay, so let me tell you what I feel what a proper bear market definition is, and in fact, actuality, this definition should be the bear market identification, because all bear markets are relative in terms to the specific period in time in which you are trading. Extremely important. Therefore, in order to properly identify a bear market, you must first identify its time frame. Now, what do we mean by this? Well, everyone trades in different time frames. In other words, how many times Have you seen someone that said, boy, the market is getting killed, and they're looking at weekly charts, and you trade hourly bars, and the market has been going straight up for the last week, right? Or how many times have you seen the monthly bars going straight down, but on a daily basis, they've actually gone up? Bear markets and bull markets are relative to the time frame. You can see prices be going straight up in one time frame, and at the same time, in another time frame, they'll be going straight down. So who's to say what's a bear market and what's a bull market? You have to identify the time frame in which you're trading. Okay? You can have a bear market on a monthly bar, and at the exact same time have a bull market on an hourly bar of the same tradable unit. So how do we do that? Well, you first have to identify what type of a trader or an investor you are. Let's say you're an investor. If you are an investor, someone who holds positions anywhere from 3 or 5 years to 10 or 20 years, this is long-term portfolio, IRA kind of stuff here, well, then you're only going to be concerned with monthly bars. In other words, you don't care if the market was down 500 points one day. You're only waiting till the end of the month to see how things happen. There is no reason to concern yourself what happened on a daily basis if you're an investor. That's how you're going to determine if you're in a bear market, by seeing what the monthly bar is doing. Okay. Now, conversely, if you're a swing trader, where you like to trade the swings of the market, the up and down tides, okay, well, then you should only be concerned with either daily or weekly bars. You don't care what's going on intraday, and you don't care what's going on the long term. I know a lot of people go to websites and go to different traders and say, well, Steve, I've always been taught you find out what the higher time frame is doing, and then you have to correlate that with the lower time frame. I thought that's the way you really trade. Take it from someone who's been trading for 4 decades. I have found no consistency in using that method. Would I tell you never to use that? No, if you want to, you can. But all that has served to do for me is keep me out of some good trades, because while I wait for the two to line up, I miss a great opportunity. So if you're a swing trader, I don't care what the monthly bars are doing if I'm swing trading. I'm only concerned in daily or weekly bars, whatever the signal is projected on. Now, lastly, if I'm a day trader, if I'm only trading intraday, well, I don't care what's going on in daily or weekly bars. I know that flies in the face of what you've been trained on other websites, but remember, it makes absolutely no difference from what I've learned. I don't care what's going on in monthly bars. I'm only interested in either minute or hourly bars, intraday bars. That's all that concerns me. Now, as a trader, I have seen full-fledged bull markets in hourly bars that go up for, hours and days and weeks, and at the same time, there's a full-fledged bear market in the same thing I'm trading on a monthly time frame. So it's silly to try and match the two. You must take each time frame for what it is and only trade the signal on that particular time frame. Don't worry about mixing and matching different time frames. That will help us determine whether we are in a full-fledged bull or bear market. We have to decide first what time frame we're looking at. Okay, so now that we've got that out of the way, let's show you some examples of how we can do that. Let's say you're an investor. Once again, you like to hold positions 3 to 5 years, maybe going on 10, 20 years. Okay, this is strictly for someone who's investing. Remember, we're only going to be looking at monthly bars. So let's go back and look at the spiders. Once again, the ETF for the S&P 500. And these are all monthly bars. How would we have known that we were in a bear market right here? And how would we have known if we were starting to be in a bull market or if we were rolling over and continuing the bear market? Well, as you can see here, we have our new PTS Primo charting platform, and this has all of our proprietary tools. And one of the best ones we have is called our buy-sell line. This basically will tell you if you are in a bull market or in a bear market pertaining to the time period you are trading. All you have to do is just click on the buy-sell line tab. It's that simple. And once you click this on, it changes the background. Now we have different features for looking at this. This is just one of our most popular. It's called the fluid buy-sell line. Okay. Now people will look at this and say, well, what does this mean? Okay. Well, here's the way to use this. We tell our members and our traders, blue sky at night, higher prices in sight. So when your price bars are having a blue background, it's telling you that higher prices are in sight and that you should only be a buyer. Now, conversely, when the price bars are in the red, well, red sky at morning, trader, take warning. In other words, you shouldn't be looking to buy. You should be taking warning. Now, as we see here, once we crossed over, we started to go lower. But how do we define this a little bit more? Let's make it more cut and dry. Well, how much, how do we know when it's going to be turning red, or how long do we wait? Well, we apply our 3-bar rule. And this just simply tells us 3 consecutive bars that close in the blue zone tell us you are in a bull market. It's that simple. And 3 consecutive bars that close in the red zone tell you you're in a bear market. You don't have to overcomplicate your trading. All you have to do is apply this buy-sell line. As you can see here, we knew in 2007, right here, when 3 bars closed below, that we were in a bear market on a monthly time frame. Excuse me, this is 2008. And look what happened after that. Pretty simple, huh? Now, even though the market rose going into 2010 and 11, we're still out of the market. We're not doing anything. We're saving all this money. By this time, if you have tried to purchase stocks, trying to buy new lows, you most likely would have been wiped out. And if you had held on the way most people did, you probably lost about half to 3/4 of your investment. But all of our students, of all of our members, were out of the market because of the simple rule here. We knew we were in a bear market, so we're out. And what about right here in mid to late 2010? Well, what do we have? We have 1, 2, 3 closes above. So until we got 3 closes below in the red zone, we're in a bull market. Even though prices have been going down for the last 3 or 4 months, we're still in a bull market. That's why you're looking to buy. And that's why we've been going up ever since. There's nothing economic you have to figure out. There's no worries about who's the president or what's going on politically. All of that is silly to overcomplicate your trading. We didn't know in 2010 who the president was going to be in 2016. We didn't know economically what the shape of the country was going to be. We didn't know what was going to be happening in Europe or, social economically. But the market did. It was telling us, listen, if you're an investor, you should be long. And all of our members have been long that follow this simple premise since 2011. Are we close or in the beginning of a bear market? Well, according to this, on a monthly chart of the spiders, no, we're not even near. Okay? But what if you're not an investor? What if you're a swing trader? Okay. Same concept applies. Let's look now at a weekly chart of the same market, the spiders. Same thing here. In 2015 coming into 2016, we had a strong downward move, and then the spiders started to retrace. Is this just a bounce before we go lower? Well, let's check out. Click on the buy-sell line, and we have the fluid background feature again. And let's use our 3-bar rule. In December of 2015, we had 3 closes below. So that's telling us we are in a bear market pertaining to weekly bars of this particular market. So you would have been out of this market, and look, you missed all of this coming into February. You would have been out of the market entirely. Now, when the market started to go up, we have 1, 2, 3 closes above on a weekly basis, and look what happened. We've been long coming into August. On a weekly basis, are the spiders near or in a bear market? Absolutely not. So there's no website you have to pay thousands and thousands of dollars to listen to some guy in a chat room or a trading room. There's no master system. You have this simple tool right here in front of you. What if you're a day trader? Okay, what if you say, well, Steve, I don't look at daily bars. I don't look at monthly bars. I'm only interested in what happens that day. I'm in and out of all my positions by the end of the day. Okay, makes absolutely no difference. Let's look at an hourly chart of the same market, the spiders. Okay, and this was just last week. All we have to do is click on the buy-sell line, use the fluid feature, and apply our 3-bar rule. We see here that we were in a bull market on an hourly time frame, but then we crossed over 1, 2, 3 closes below. That's telling us on an hourly time frame we are now in a bear market. And look what happened. That was when the market fell out of bed. We all remember when the market last week was down a couple hundred points. So many people were caught off guard thinking, boy, where did this come from? None of our students were. We knew to be out or be looking to go short. Trading is simple. The only reason why it's complicated is because we make it that way. We get in our own way. If you know how to listen to the market instead of listening to some guy in a chat room or listening to some guy on TV or having 10, 20 indicators in front of you and trying to figure out what's going on, if you strip away all that and just learn to listen and keep things simple, trading becomes very consistent. Remember, I traded just like just about 90% of you probably do. I looked at volume, support, and resistance. I had all the earnings reports. I knew what all the fundamental news was going to be, all the earnings projections, and did it work for me? Absolutely not. I had no consistency using those things. I was using Fibonacci, support and resistance, Elliott wave. Nothing worked. It wasn't until my mentors took me aside and said, Steve, listen, this stuff is useless. How is it working for you? If you're so committed to that, ask yourself, how's it working? And I said, well, it's not working at all. I said, well, then throw it away. And once I did, it took a lot of courage, but once I did, they taught me how to simplify my trading. And I believe that has what has been able to sustain me for 4 decades now. And this is what we try to teach all of our students. Okay, so someone looking at this would say, okay, how do we make money on this? Well, in a bull market, you're only going to be long. You're never going to be selling if price has a blue background. And conversely, in a bear market, you should only be short. You will never be buying if you have a red background. That's how you become consistent. I use this same premise. Today, I was intraday trading today. I used the same things you're looking at and made money this morning in the first hour or two of trading being long because the market went up. I wasn't trying to pick a top. I wasn't trying to sell into a sell-off that occurred. I was looking for buy setups. It doesn't matter if we're trading monthly bars or if we're trading tick charts the way I was trading, okay? So remember, in a bull market, only be long. Now, that bull market can be on a 5-minute chart. It can be on a monthly bar. And in a bear market, only be short. That bear market can be on an hourly chart. It can be on a weekly bar. It makes no difference, but you have to trade each time period for what it is. All right, so someone say, okay, I've got it. I'm willing to throw away all my stuff and believe in this. Now, how do I make money? Well, we now have to add some structure. Structure in terms of a strategy, another rule-based method that tells you where to get in, tells you where to get out, gives you a stop placement, also tells you rules for money management. So let's show you how we can just so simply apply some of our best methods to this technique I just shared with you. Once again, with our PTS charting platform, we have our green strategy tab right here. This has all of our methods, all of our strategies. If we click on one or two of those tabs, automatically the buy and sell arrows appear. So do you think if you were a monthly investor in the spiders, looking at these signals, these are actual signal alerts here, that you could have done well on any of these? Now, obviously, some of these are much better than others, but we in the courses teach you which ones to look for. Let's say you're not an investor. Let's say you're a weekly swing trader. Okay, we look at the same market, a weekly chart of the spiders. We click on one or two of the strategies, and you think you could have done well using any of our strategies. These are strategies that I've been trading with that I learned some 4 decades ago on the floor. It's not something that I just, picked up and, learned a couple of weeks ago. These are things I've been using for 4 decades now. What if you're an intraday trader? Remember that 1-hour chart we looked at last week when the market fell out of bed? We click on a couple of these strategies, and as you can see, when we were going up, we had nothing but buy setups. And then once we started going lower, we had nothing but sell setups. Think you could have made money on a 1-hour chart on the spiders if you were day trading? Let's look at some other markets because we've just mainly focused on showing you how to apply these techniques, how to apply this on the spiders. Let's look at some other markets because we know not everyone just simply trades the spiders. Let's look at IBM. All right, now IBM has been in a sustained bear market, okay? A lot of people are saying, I can't believe how much it's fallen out of bed. Well, why would that be so hard? You have 3 consecutive closes right here. You knew well in advance that this was a bear market starting in March of this past year. And this was when price was roughly at 180, okay? We're all the way down 40 points lower. Now, if you wanted to trade that, well, you click on one or two of our strategies, and you think you could have done well. Now, remember, we're not promising you that every strategy is going to work well. Here we had 3 closes above. 1, 2, 3, and a buy signal was generated here. And this obviously would have been a small loss. But the beauty in our methods is their consistency. Remember I said at the very beginning of this presentation, I'm not here to talk and share with you how we have some 1000% method that never loses. We don't believe in that. We're just trying to share with you techniques that have shown high levels of consistency throughout the years. So we have 1 or 2 bad trades, but look at all of the great trades you had on the way down. How about Facebook? Now, this is a weekly chart of Facebook. A lot of people say, boy, I can't believe this. I wish I could have gone long this or known it was going to have this tremendous upward move. Well, it would have been easy. Going back to 2013, we were above the buy-sell line. So you knew in advance, not by earnings projections, not by how people were going to take to the stock Facebook. We knew just simply by looking at this simple tool that if price is above, blue sky at night, trader delight, higher prices in sight. And that's all you have to remember. That's all you have to learn. And is Facebook in a bear market? Absolutely not. We're going to wait until it has 3 consecutive closes below the red bar here. Now remember, this is just a weekly basis. This all changes if we go to intraday or monthly bars. Now, you think you could have done well applying a couple of our strategies as well? Look at all the buy signals that were generated. Let's go to CMG, all right? A lot of people are saying, boy, this stock sure fell out of bed. Boy, a lot of these guys were holding the bag. This stock was close to 500. It looked like it was really going to take off, and then it fell out of bed. Well, it would have been easy if you used our 3-bar rule, 3 closes below right here, and you knew to be out of the stock if you were investing. Now, this is a daily chart, okay? So we were in a bull market up until June of 2017, and we started a bear market. Now, if you wanted to make money and trade off this, you simply click on a couple of our strategies and look at all the signals that were generated. Now, we teach you all of the rules to these strategies. This is not a black box. So we don't want you simply to come here and rely on clicking on buy and sell signals. We want you to know why you're buying and selling. Most of our students, after they learn the techniques and the rules, don't even use these arrows because they know when a signal has been generated just by looking at the chart. That's how well we teach and train all of our members. How about a monthly chart of Apple, okay? Do you think Apple has been in a bear market on a monthly time frame? A lot of people say, boy, I wish I had invested in this. Well, I know it's split a number of times or broken up, but relatively, way back here in 2009, do you think you would have purchased it roughly at $18 or $20? Why not? Okay? And it still has not had 3 consecutive closes below. Now, this is a monthly chart. Remember, take each time frame for what it is. Now, if you were one of the lucky people that were able to do that and purchase Apple back in 2009, you could have easily used one of our methods, 1 or 2 of our methods, and look at the buy signals that were generated. Okay? You think you could have done well by using any one of these methods. Let's look at a 15-minute chart of the QQQs because we've looked at daily and weekly. Let's look at intraday trading. All right? This, once again, is going back to last week. Now, we had a nice bull market that started right here on a 15-minute time frame, telling us we should only be long. And we had some really nice setups until roughly the 9th or 10th of August last week. Right here, 1, 2, 3 closes below. At the end of this day, we're no longer going to be a buyer. Okay? We know we are only looking to sell. You think that would have helped us? If we wanted to stay out of the market, we would have missed all of this. But if we wanted to trade, look at all the signals that were generated using these 2 strategies, okay? And these are just a couple of the strategies. We have upwards of 9 strategies and techniques that you can apply. A lot of people are talking about gold with these uncertain political and times, what's going on in the world, and possibly war may be coming soon. So a lot of people are saying, well, Steve, you know, we have to find out what's going on politically. We have to see what's going on in the White House. The market tells you what it wants to do, okay? Now, gold had a very, very strong bull market on a monthly chart, but then coming here into 2013, it told you to get out of gold. So if you had purchased it down here, even though you didn't get out at the top, you were out with a nice profit, and you've stayed out of gold until here. We have just about 3 consecutive closes. I think we have to wait and see at the end of this month. But having said that, we still have generated a buy signal on a monthly time frame. This was in July, a buy signal was generated. So it remains to be seen whether that will be a good signal or not. But you think you could have done well either way with these signals, buying gold well down here. This is the ETF for gold. And then once it went into the negative zone, into a bear market, how you could have sold gold. Now, I'm not telling you that we are giving a buy signal in gold. I'm just telling you that that particular strategy has generated a buy signal on a monthly time frame. A lot of people say, well, Steve, news just, circumvents everything. You can't say that this will work in the face of news because a lot of times, technical stuff is out of the opposite of news. And that's true. That may be at some time, but because of the techniques and what we apply, many times we are in sync with the news before the news is even presented. For example, Yahoo reported last week, JCPenney & Company, Inc., JCP stock collapses on weak second quarter earnings. Okay, the stock fell by more than 16% on Friday after the company's second quarter earnings report released before the opening bell. The department store chain lost more than 9 cents per share for the quarter, and that's more than double the 4-cent loss that Wall Street had expected. So this came out last week. Someone looking at that, this is the way most traders will trade. They'll look at that and say, boy, I've got to get out of this stock. It's not good. This is so negative. Why would I even buy this? I thought it was going to turn around. I looked at the fundamentals of the company. They got a good CEO in there. I thought maybe things were going to turn around for the company. Do you see how the decisions you made to buy JCPenney as an investment are all based off outside sources? You weren't listening to the stock, and the stock is not its earnings. Trust me, people, for someone who made markets in 50 stocks, I tracked the earnings of all those stocks, and it didn't help. So investing in a stock has nothing to do with earnings, in my opinion. Now, you always can look at that if you want, but I stopped looking at earnings, 4 decades ago, and I'm still here. So it really doesn't come into play. All you have to do is apply the buy-sell line. And if you notice, back here in 2012, what did we have? 1, 2, 3 closes. We had a number of closes below. This is when the stock was trading in the mid-20s. So if you were an investor, that was your signal to get out. Forget about what's going on with that particular group in analysis. Forget about the earnings. Forget about who's the CEO. Forget about the economy. The market's telling you we're in a bear market. Don't buy me. Or if you are going to buy me, click on 1 or 2 of these strategies here and look at all the signals that were generated while we've been going lower. Okay? Remember, trading, investing is easy if you get out of the way, if you make things as simple as possible. Don't overanalyze. So many people think that's what contributes to your consistency and to your success, but in 4 decades, I found that that's actually what gets in the way of your consistency and success. Okay, let's look at an entirely different market. Let's look at the intraday trading of the S&P, all right? This is last week. Remember when the market fell out of bed, it went down a couple of 100 points intraday? A lot of people lost money day trading because they were trying to pick a bottom, thinking it was going to stop, okay? Looking at this, once we've applied our buy-sell line, is the market in a bull market or a bear market? It's in a bear market. Do you buy in a bear market? Absolutely not. You only sell in a bear market. That's how you become consistent. Red sky at morning, trader, take warning. So don't buy anything. All you have to do is simple as click on a couple of these strategies, and you think you could have done well that day. I know most of our traders did. It's easy to trade intraday when you're in sync with the trend. Now, does this rely on the daily bars? Does this look at the trend of the daily bars? No. We only look at the time frame we're trading. We only are concerned with the time frame that the signal has generated on. I don't care what the daily bars are doing. I don't care what the hourly or the monthly bars are doing. It's not required at all at specialist trading. I know a lot of people swear by that. Someone who's been trading for 40 years has never used that because I've found no consistency in that. Now that was last week, but then the market turned around. So we just turn around with it. The same market, the same time frame, but now are we in a bear market anymore? Absolutely not. We're in a bull market. Okay? Blue sky at night, traders delight, higher prices in sight. So we're only going to be a buyer. If you're losing here, it's because you're trying to sell. We only want to be a buyer. Click on a couple of the strategies you think you could have done well using any of our buy setups. And lastly, let's look at the Forex markets because I know we have a lot of currency pair traders here. Here's the Australian dollar. Now the Australian dollar was in a bear market on a daily time frame. We don't care about the intraday. We don't care about the monthly or weekly. If we're looking to trade signals on the daily, that's all we're concerned with. So on a daily time frame, we were in a bear market from April up into the beginning of June. But at the beginning of June, we switched over to a bull market. So during the bear market, we were sellers or on the sidelines if we don't like to sell. But once we turn into a bull market, we turn into buyers. And we see here that all the time we were in a bear market, we issued nothing and generated nothing but sell signals. All the time we were in a bull market, our strategies issued and generated buy signals. This is the Australian dollar coming into August. And then let's look at an hourly chart of the dollar yen. Now, in the beginning of this, on an hour, August 8th, we were in a full-fledged bear market. Why? Because prices are in the red zone. You never want to be buying. I know we had a nice little rally here. Someone could say, well, Steve, we bottomed out here. Could have made some nice money to the buy side. Sure. But it's those times it doesn't bounce where you give everything back. It's much better and much more conducive to consistency if you just trade in sync with the bear market by selling. And once you go into a bull market, you start to buy. This is an hourly chart. Are we looking at the daily charts of the dollar yen? No, we don't care. We're looking at the weekly? No, we don't care. We only are concerned with the time frame that we're trading. Okay, so let's recap before we go into questions and answers. Remember, bear market identification. All bear markets are relative to the specific period in time in which you are trading. Therefore, in order to properly identify a bear market, you must first identify its time frame. In other words, if you intraday trade, you're not concerned with a bear market and the monthly bars, and vice versa. You're only concerned with a bear market in your particular time frame. So which time frame are you? Well, if you're an investor, your time frame is monthly bars. That's all you're concerned with. You don't care if the market goes down 200 points in one day. It makes no difference. All you're concerned with is looking to see what the bars look like at the end of the month and where they are in relation to the buy-sell line. If you're a swing trader, you're only concerned with daily and or weekly bars. Take your pick. And lastly, if you're a day trader, you're only concerned with monthly minute and or hourly bars. You don't care what the weekly bars are doing. Makes no difference. Okay? Now let's look at the last bear market just to show you how well this played into key. Now we've only showed you spiders. That's the S&P 500 index. Let's look at the ETF for the actual Dow. In our last bear market, which was roughly about 10 years ago, going on 8 to 10 years ago. This is a weekly chart of the diamonds. Okay, the diamonds are the ETF that represent the Dow. Let's say you're a swing trader and you were caught off guard. You couldn't believe the bear market, and all you kept doing was trying to buy off these lows that were made, and you weren't doing well at all. Well, remember, if you have our buy-sell line, especially our fluid feature, you would have known that we were in a bull market up until November of 2007 when we had 3 consecutive closes below. That's when you change into a bear market. At this point, you have the decision. You can either be on the sidelines during a bear market if you don't want to trade and look for another market that's in a bull market, or you can look to capture some short trades. If you applied 2 of our strategies up here in our strategy tab, look at the signals that would have been generated. Do you think you would have done well buying while you're in a bull market, and then once you got into a bear market, selling? You could have actually sold at the very top here, going in 2008 all the way down to 2009. Okay? These are actual signals. This is actually what comes complete in our new platform. Remember, as my mentors taught me, in a bull market, regardless of time frame, only be long. In a bear market, only be short. So, before you ask me questions, I want to ask you a question and answer yourself honestly. Do you think these edges could have helped your trading this past year? Well, I have a great offer for you today. This is our special discount for all the people in attendance today. And it's actually going to only last, the link to this only lasts 24 hours. We're going to offer you our pair of aces. Those are strategies 4 and 5. These are the 2 of the strategies that you saw all the buy and sell arrows being generated on the screen there. Those were strategy 4 and 5 signals. We're going to offer you instant access to both courses, detailed instruction, roughly about 15 online videos. We're going to share with you all the entries, all the exits. We're going to teach you all the stops. We're also going to provide you with signal alerts. You get the complete rules to all these methods, and this includes both add-ons. So we'll show you, going into the question and answer portion, which software packages you can apply the add-ons that automatically generate the up and down arrows. And lastly, we're going to include mentoring correspondence, 40 years of instructional correspondence through email. You can contact me and I'll get back to you as soon as possible. This is our winning pair for any market, strategy 4 and strategy 5. But we're not going to stop there. We're also going to throw in the charting platform where you saw the buy-sell line. This is our new PTS Primo charts, the trading educational portal you've been searching for. Remember we said that we're all about educating you? This is what the PTS Primo charts does. One click away from educating you all the things that I've accumulated in 40 years. And guess what? We're offering you 3 months free. So you're going to get the strategies, including 3 months free of the PTS Primo charts, which comes with that buy-sell line. We're also including the bonus as the scanner, okay? You're going to get a scanner included because that comes with our new PTS charting platform. Let me show you how simple it is. We know a lot of people are in front of their computers all day, but what if you're not able to be all the time? What if you're watching this at work right now or on your lunch break and you're not able to trade in front of your computer all day, or you're not that type of a trader? You like to trade as a swing trader or an investor. Let me show you how easy it is to get those signals generated. You would simply click on our strategy scanner tab, just one click under whatever you're trading, and you'll see this window up here. Now you would hit load symbols, okay? And we provide you with different symbols. We provide you with the NASDAQ 100, the S&P 500. You can create your own basket of stocks you like, but whatever you click on and whatever you decide to have as your symbols, it will come up. And in this case, I believe it was the NASDAQ 100. And all the symbols in that particular section you're looking at will load. Once they've loaded, it's as simple as just clicking on scan. And once you click on scan, you will see a process going that lasts maybe about 30 seconds to a minute that scans through this entire list that will generate the signals for that particular strategy that you're trading. So as we see here, we have some red bars on the right. That means that those were actual sell signals being generated in those stocks. Now, had you done that scan last week, you would have seen we had some major sell signals generated in DKS. Now, a lot of people were so surprised at the earnings of the company, how it's just falling out of bed. First of all, with our proprietary buy-sell line, you would have known well in advance that this was in a bear market on a daily time frame. So you know you would have only been a seller. And if you were tracking any one of our strategies, you would have seen that this was also included, okay? You would have had numerous sell signals given to you. This was just last week. So we're going to include the PTS Primo charting platform. This comes with trading strategies 4 and 5. This is our winning pair. All of the signals that you saw generated were applying strategies 4 and 5 in our presentation today. This is also coming with steps. Now, strategies 4 and 5 come with complete rules for entry, exit, stop placement, money management. Steps is simply 2 proprietary entry techniques. So if you already have a strategy you feel comfortable with but just want to improve your entries, this comes with a great extra feature where you can enhance your entries, and it simply tells you exactly where the high probability entry point is for whatever strategy or method you're trading, whether you want to go long or short. These are 2 proprietary methods. Also included are the signal scanner, which I just shared with you and showed you how simple that is to use. You can apply that to any market, any time frame. We're also going to throw in the enhanced buy-sell line. Now this comes with 3 or 4 different features. The one we shared with you today was our fluid feature, where it colors red and blue, and it shows you the slope of the 50-period moving average, which is all it is. Now, we also include 90 different technical indicators. So if you like to tinker under the hood and experiment with different indicators and try and come up with different ideas, this platform comes with 90 different indicators as well. Now, we realize that not everyone is a total 100% technician. So we also include Bloomberg TV. It comes in the platform. So you have 3 months of real-time live charting work in front of you. Included with that, you have real-time Bloomberg TV. All you have to do is just click on the TV and it appears on your screen on a different page. Lastly, we give you personalized tech support. We really feel proud with the tech support we have. We have nothing but high praise for our tech support department, and any problems you have setting it up or putting it together, it can be solved, and usually the issue is resolved in a matter of minutes. So, as we stated, we're including our winning pair. This is our pair of aces, strategies 4 and 5, instant access to both courses, all the videos, including the exits and stops. We also will include add-ons if you like to use it on your current platform, but this comes with 3 months of the PTS charting platform, which includes all those extras, which I just went over with you. Now, if you usually purchase these separately, this would cost close to $1,700, okay? But trust me, don't worry, we're not even going to be offering close to that. In fact, we're going to slash that price by 40%. We're going to discount it 40% down to $995. All of this included, okay, $995, and we're offering payment plans. So even if you don't come up with $995 for a small deposit, you'll be able to take advantage of this and still be up and running with strategies 4 and 5, 3 months of the PTS charting platform, and my mentoring for as long as you'd like, okay? Trust me, a year from today, you will have wished you became a member of these courses. That's how much information there is, jam-packed, and roughly the price will be $1,700 to $1,800, and by next year, we feel it'll even be higher. So lock yourself into this great, great offer. So here's the information. Contact Pro Trader Strategies. If you have any more questions, you can email them at the email address provided, or call them directly if you want to set up a payment plan, which in my opinion is probably the best thing you should do. You should call 310-598-6677, and if you don't want to come up with $995, you put it down a small deposit and you'll be up and running in a matter of moments. Now that link at the very bottom is the link that will take you to the sign-up page for this great offer, but that link is only going to be good for 24 hours. So I would take advantage of this really quickly. And you see here, it's not a live link, but if you go to the chat box on the far right-hand corner, they have posted the live link. So you can just simply click that on and it will automatically take you to that sign-up, okay? Now we have about 10 minutes left for questions. I want to thank you all for holding off so that we could have gone through this smoothly. And I'll leave this information up here while I open up the question and answer box. Let's see, Danny asks, would buying puts be a good strategy for a bear market? Yes, definitely, Danny. Remember, now I just showed you which side of the market you should be on. In other words, if we're in a bear market in a particular time frame, in a particular market you're trading, well then yes, you should only be selling. Now some people don't have the capital or don't like to actually short the stock. That's okay. It doesn't mean you can only do that with that particular issue. Sure, if you want to buy puts, that's fine. But the buy-sell line, the one thing I have to stress is not a strategy. In other words, it automatically doesn't tell you, well, we have 3 closes below, so I'll sell. That's not its purpose. It's mainly there just to tell you if you're in a bull market or a bear market, depending on the time frame. Now, once you decide that you're either in a bull or a bear using the 3-bar rule, then you need some structure. This is where our winning pair comes in of strategies 4 and 5. They provide the structure. These are techniques I've been using for 4 decades now that I used this morning that helped me make money this morning being long. I don't know what the market's doing now. If the market's going lower in the particular time frame I was trading, well, then I would be only looking to sell. So it all depends on what market you're trading. It all depends on what time frame. But strategies 4 and 5 can be applied to intraday trading. They can be applied to daily bars, to weekly, monthly. It makes no difference, okay? So that's the structure you need. Once you know whether you're in a bull or bear market, then you apply the strategy, the structure. The good news is that's exactly what we're providing you today. We're giving you all the information to know whether you're in a bull or a bear market, and we're also giving you the structure to trade those bull or bear markets. It's a great, great package. I can't think of a better deal for such a low price as well. Christian asks, the buy-sell line is a moving average or exponential moving average, which in what time period? The buy-sell line is simply the 50-period moving average. But what a lot of people like about our fluid feature is that it tells you the slope with those different colors. So right off the bat, you can see the velocity and the momentum behind it. And the features, even though people could say, well, can't I just use a standard 50-period moving average? Sure you could. But there's something about seeing the colors and knowing whether you're in an overall bull or an overall bear market that really helps people. I mean, we've had people that have used our methods before, but once they apply the fluid buy-sell line, they say, this makes things so much simpler. And now it just gives me an identity of which side I should be on. Okay, remember, it's so simple. Red sky at morning, trader take warning. Okay, blue sky at night, trader delight, higher prices in sight. So that's why a lot of people like this, because they see the colors, they see the slope, they see the velocity and the momentum of that, and it helps them in determining whether they should take a signal or not, okay? We provide you with all the information. Now remember, a lot of people are asking, well, are these systems? No, these are strategies. Strategies are rule-based, but they give you the option to change and the variables included so that you can decide to trade more aggressively. You can decide to trade more conservatively. You can apply options. You can trade the stocks. You can trade futures. So remember, we give you those variables because we want you to be a part of the process. In the very beginning of this presentation, I said the reason why most traders fail is because you take yourself out of the game. You rely on someone to do your trading for you. Well, that's not what we do with our strategies. We give you the information. We show you the format, but then we work with you to mold it to meet your needs. That's why there's no statistics behind these, because everyone trades them differently. The way I traded this morning is probably entirely different the way someone trades it on a weekly bar. They may trade more conservatively. They may trade more aggressively than me. The good news is we structure it around so it meets your needs so that you feel comfortable, okay? Okay, next question from Mark. Mark says, I have strategy 4 and I have made 5,000 already in a little over a month. I have one problem. How do you stop yourself from taking profits too quickly? Well, Mark, thank you, Mark. Now, Mark is unsolicited. We didn't ask Mark to write this. One of the things, Mark, that's in the course, and you can send me an email. I don't want to go over that. There's too much. We have to go over your type of trading, but we don't want to go over that, right now to take too long. It depends, remember, on each person's style of trading. I'm glad Mark has been successful. I'm doing very well. I'm glad he's doing well. And everyone is different. Someone may say, well, you know what? I make 500 a month, and that's fine for me. And someone could say I make 5,000. Someone could say I make 50,000. Everyone's going to trade them differently. So knowing if you should stay in the trade longer or get out is up to your own type of temperament. And we work with you. If you wanted to send me an email, Mark, of how you trade, and I can answer those questions. That's what we do as your personal mentor. I will look over your setups and show you different ways in which to elongate your trades or to protect yourself if you're in a trade from losing that money. Remember, this is coming with 40 years of experience. We're not just throwing this to you and say, well, good luck. I hope it works out. You're getting someone who's been using these techniques for 40 years. Once again, I started on the floor in 1977. I was on the trading floor, so I know what works in terms of consistency, and I know what doesn't. So if there's anyone to ask, it's not someone who's been trading for 5 or 10 years who maybe has had a good run but could give everything back. I've been trading through 2 bear markets now and 2 bull markets, so I know, what to look for and I know what not to look for. I know what works in terms of consistency and I know what doesn't. And I really think my experience and knowledge can help you as opposed to someone who just came up with a master system in a couple of years, okay? So this is not to knock anyone. This is just to show you who would you rather have as a mentor? Someone who's just been around for 2 or 3 years or someone who's been doing these things for 40 years? This is what we provide you, education. We're not trying to sell you some master system and say, good luck, don't worry. We back tested it and it should work fine. These are things that work over time, but you have to be a part of the process. I'm not going to sit here and say, there's nothing you need to do. Whenever a green arrow appears, just buy. I don't believe in that. We don't provide those arrows just simply for you to use as a crutch. We provide those arrows for you to learn and know what to look for, and then ultimately you won't even have to use the arrows. You'll know when a setup is appearing automatically. I don't use those arrows. I've been trading these things for 40 years. I know when there's a proper setup with strategy 4 or 5, okay? Danny asks, have you traded the VIX, the VXX consistently? No, Danny, I don't trade them, but we have a number of students who do, and I've gotten some great testimonials where it really works tremendously because they trend tremendously. Now, I don't know about intraday trading. I know they're not that great because of the volume and the way the charts appear, but I've seen daily and weekly bars that have some very, very strong trends in the VXX, and I know you could apply our methods to them very well, okay? Let's see, Michael says, for a longer-term investor, bear markets are nothing to be afraid of. It is just a great time to find good or even great stocks on sale. Yes, you're right, Michael, and in fact, it's been my experience, once again, I'm not saying that this is statistically proven. My experience in the 2 bear markets I've traded, there is greater opportunity in bear markets than there is in bull markets. Bull markets seem to have this stair-step approach, and they many times will climb a wall of worry, and then many times they change at the drop of a hat, they'll change and keep, everyone off guard, because it's just, like I said in the very beginning, one week everything looks rosy, the next week we're in a bear market. Whereas bear markets move tremendously, much quicker, they're much better trending, and you can make money quicker in my experience. So there's so many more opportunities for bear markets. So as a trader, I don't care what direction it's going. There are opportunities in every direction. The only thing is we have to be in sync with the market. And no one really teaches you how to be in sync with the market. They have their master system, or they rely on things that have no consistency. But all we do is listen to the market. And the market tells us what it wants to do, so we just jump on board. We're not trying to predict anything. We never predict how high a market will go or how low it will go. We only listen to it. It tells us what it wants to do, and then we jump on board. Those are our only rules and jobs as a trader. Listen to the market, find out what it wants to do, and then jump on board. That's it. That's how simple trading can be. There's nothing else you have to do, okay? Jay is asking, can you trade non-USA stocks with your software? Yes, I believe so, Jay. That would probably be a better question for Pro Trader Strategies, since they handle that with the tech support. But I know we have a number of members around the world who use it for their individual markets that are not USA. And so I would give them a call. Remember, there is no obligation in just calling and asking more questions with Pro Trader Strategies. So they have many trading consultants manning the phones right now. You can give them a call, and they'll answer any question you may have about a specific market. And you can also, if you're glued to your particular charting software, say you like TradeStation, or say you like NinjaTrader, these add-ons can be applied there, but it doesn't come with all the different features. It doesn't come with our scanners. It doesn't come with the buy-sell line. It doesn't come with all these different steps, features, the entry techniques. So there's a lot more included with the 3 months you're going to get for free of our new platform. So I would really take that deal of $9.95. It's a great, great offer, okay? Now we're just about out of time. I want to thank you so much. And as I stated right before we concluded, I strongly feel that a year from now, you will have, felt that, boy, I wish I would have taken these courses, okay? I really wish I would have taken this, because it's that, it's that empowering. For the first time, I think you're going to feel as if you're in charge of your trading destiny. I get testimonials and emails from people all the time saying, Steve, for the very first time, I'm able to make money on a consistent basis. Look at, who's that, Mark? Yeah, Mark said that I'm making money every month, roughly about $5,000 with Strategy 4. Well, we're giving you 2 strategies included with all the features in the PTS Primo charts. And we're not, just giving them to you. You're also coming with 40 years experience as your mentor, teaching you all of this information, okay? So there's so much information here, as well as learning and training from someone who has been using it for 4 decades. I think you can't get a better price for all of this education. As I stated in the beginning, we are an educational company. That's what I'm trying to do. Educate you as traders so that you won't have to rely on anyone or anything else, and then you can hopefully be trading not just a couple of good years and then give it all back, but 10, 20, 30, hopefully 40 or 50 years down the road. That's my goal as your mentor. So remember, take advantage of this great deal. That's a great price, $9.95. It includes all the things we talked about. Call up Pro Trader Strategies and structure a payment plan, so you don't have to come up with that full price. You can put up a small deposit, and you can be up and running as soon as possible, okay? In conclusion, I want to say thank you so much for attending today. I wish you the best of luck trading, and I look forward to all of you becoming students of mine at Specialist Trading and Pro Trader Strategies. Thank you so much. I'll see you next time. Bye-bye.